Big positive news coming in for India this Friday morning. Moody's has upgraded India's sovereign rating for the first time since 2004. Before we get to the implications of it, the details, Moody's has put India in rating category Baa2 now compared to the earlier rating category of Baa3. We were at the lowest level of investment grade. We have now moved a notch higher to Baa2. The outlook on the rating is stable, as is the case when you move between rating categories. Now, Moody's in their release is talking about the fact that they think all the reforms that have been undertaken by the government will be structurally positive for the Indian economy. They do expect reforms starting from the likes of GST to the implementation of a new monetary policy framework to the recapitalization of Indian banks. Also, the Aadhaar identity system and the direct benefit transfers, the whole host of reforms they think are going to increase India's potential growth rate. They acknowledge that there will be some short-term weakness and disruption due to the far-reaching nature of these reforms. So they have downgraded India's growth outlook for the current year, but they say that over the medium term, they expect Indian economy to grow at a stronger pace. For next year, they've put a growth estimate of 7.5% of GDP. For the current year, though, they do expect some weakness in Indian economic growth. Their basic rationale, and at BloombergQuint, we spoke to Moody's, was that from a medium-term standpoint, these reforms will play out very positively for India. So you have a scenario where potential growth is higher, you have a tax base which widens, which means that the Indian government is in a far stronger position fiscally as well, and there will be gradually a stabilizing or perhaps even a decline in the debt to GDP levels of the Indian government. Now, just to give you the context to this, so far there have been a couple of questions that rating agencies have raised, but the primary one has been the fact that India's debt to GDP ratio has been higher than other peers in these rating categories. Moody's now says that they note that it remains higher than other rating peers, but they do expect all the structural reforms to have a positive impact even on the debt to GDP numbers. Now, remember that the government has been arguing for a rating upgrade for a very long time. Arvind Subramaniam in his economic survey had actually questioned the metrics used by rating agencies. So this morning when we spoke to the government, Arvind Subramaniam said that this is welcome. He said that the government doesn't make policies for rating upgrades, but the fact that this has come through is a vindication of sort of all the reforms that the Indian government has undertaken. Markets across the board have taken this positively. So the rupee on open jumped almost 1%. The Indian 10-year bond yield came off by nearly 10 basis points, trading below the 7% mark now, and equity markets also gave a thumbs up. Does this translate into higher fund flows immediately? Maybe not. Maybe in the equity markets and to some extent in the bond markets there will be, but I think the bigger picture on this is that a rating upgrade combined with something like India's increased ease of doing business going by the World Bank index will probably mean that foreign investors would look at the country far more favorably now.